Hi, welcome to Get Serious. Another update on just subdivide guidelines, specifically minor subdivides. I feel like I can talk about this topic almost every other day until I'm blue in the face, and that probably still isn't enough to get some of these points across on just how conservative and data-driven your analysis needs to be before considering investing in any minor subdivide potential project or presenting it to a funder, because the handful of ones that are actually well thought out are a distant minority, to say the least. At least the ones sent over to us. And again, I know I've been talking and writing a lot about it's a difficult market. Not just me saying this. The industry is in a tougher spot, the higher interest rates, real estate in general. We're in more of a down cycle, especially in most areas of the country. And so you just got to be more cautious. That doesn't mean you can't succeed. Again, we're about to have our most profitable month ever in the history of our business this July here. But it's been a rough road to also get here recently. And, we're still operating in a more conservative mindset, resetting growth expectations over the next year and a half or so in order to thrive even more going forward. So it's a whole nother conversation, but that serves as a helpful backdrop that you can't just be willy-nilly kind of trying to figure out some of these subdivides. And this is even more the case because whenever you undertake a particular subdivide, you're going to run into potential extra time on market, a general higher cost for the deal in and of itself, adverse selection for lots that might not be as interesting to buyers, based on certain characteristics of the underlying terrain. So, all of these factors can really come into play that just, can really affect your exit projections. So again, I know I've talked about this a lot. It bears worth repeating again constantly. And so just to serve up another example, I was reviewing this deal what state was this in? This was in northern Tennessee, very rural area. Again, I've struggled in Tennessee recently, so I'm even more wary. Plus, again, it's another COVID boom state that has faced a retraction in home values and steadily decreasing demand at the moment. So if you're gonna, like this particular project, they were considering doing 10 to 20 plus, potentially 2-acre child parcels off of a roughly 45-ish acre parent tract. But the terrain was all over the place. First, it was like a very rural, like I said, rural part of the state. And there was a lot of just hilly terrain. Some of the parts of the parcel just had, near valleys and crevasses that had, wetland creeks running through it. Unclear if there was even viable buildability. In order to do that number of child parcels, you're probably going to have to install some type of easement road situation to give everybody access. And that's another thing I asked too, like if you're going to send something over to funder, like really think through the child parcel map, draw it out. It doesn't need to be perfect. Just throw some lines up on there so then, I'm not necessarily making incorrect assumptions. I can't tell you how many times it's happened when people are like, yeah, I want to do 3 or 4 split child parcel and but don't supply that extra info, and so I have to kind of guess, and then they come back and say, well, no, actually I was thinking about doing this way. And it just changes the equation a lot more. So, again, just like come prepared, at least have an idea on what it's going to take and what the design actually looks like. So then I can assess that, adverse selection potential, as well as like what other costs might go into handling the subdivide, and what county regulations are there, and costs and survey costs. Do we need to get perk tests and all of them? Like all of that, it has to be factored into the deal at hand as well. And then again, everything really comes back to the market. Comping continues to be a difficult skill, something we're always trying to get better at and trying to build a tool around, obviously with Land Pricer, to do this more reliably. And this has only like reinforced the fact that it's just people view, I think, comps in too rosy of projections, especially for subdivides. Like you might get a sense, oh, there you can just do a overall price per acre breakdown, or even use some of those more automated tools. You can just look at, okay, I have a whole bunch of comps in a hilly area. It has similar contour. But you don't actually know the nuance of the contour. That's the thing. Like, if you're just using some of those pure AI mapping and just like, oh, it's like 25% steep contour, but you don't know where that steepness is, right? Like, does it affect the more buildable area versus not? Like that nuance is very important. How close to the road frontage is it? And same with like floodplain and wetlands. Like, so what if it's, 20-25% flood zone? Where is that flood zone? Like that needs to be determined, which, you really need to put eyes, aerial eyes through mapping in order to fully tell what the actual characteristics are for some of these comps in relation to the subject properties. And again, the land market changes very rapidly, especially over like the last 8 months or so. The mini boom market end of last year, heading into this year, and then it got a lot tougher. Especially after, early April of 2025. There's oftentimes a lot more of kind of a depression on pricing after that particular date, or roundabouts, or just less activity in general. Not everywhere, but in many areas that we've looked at, that has been the case. And so you really have to compare, okay, your price per acre of the last few months that have closed, or really last couple months, accounting for pending time for properties that went under contract after early April. And then a lot of people will use last 12-month comps. You get a lot of activity in late 2024 and so forth, and it's just not as relevant as it is now. Plus, again, some of these characteristics of these other properties are just much better. They might have already had septic installed on the property. You might have already had a home clearing. Like, you have to take this into account for the price per acre that that you're considering for these properties. And again, this was like right at the borderline for where price per acre is even useful. Like anything below 2 acres, maybe 2.5 acres, I throw out price per acre entirely. Like, it just becomes a price per parcel instead, that you have to judge more by characteristics instead of sizing. Like, I've made that mistake and lost money, probably the most money I've ever lost on a deal, by not hewing to that, fact of the market. So like, don't make that mistake. You can probably feel the pain in my voice from that standpoint. And there's that, a smaller property in Tennessee that we're still struggling with, going to take a loss on because we screwed up that part of our analysis as well. So like, you have to blend all of this together and really assess, also like, have there been other minor subdivides that have sold in the area? Are they actually like pushing through the market? And like, what are their characteristics similar to yours? How long did it take to move through the market? Are they still active? And then, when you take into account all of this and you realize, okay, I'm going to be bringing a whole bunch of inventory that's all relatively similar, or I'm going to have to fight against adverse selection, like some of these that are super hilly with maybe creeks in them. I'm going to have to undercut my anticipated price per acre even more. So, you're always going to want to undercut whatever the market is moving at too, especially if you're seeing comps that are moving, north of 120, 150 days or so. Like, if you're actually trying to move a whole bunch of inventory, you're really going to have to depress the price down to get things to move, especially if you don't have that many superior characteristics. So, in this particular property that we were looking at, the investor was like, yeah, looking at the market, it seems, and things can be going anywhere from like 13 to 18K per acre within this area for this type of sizing. But when I looked at it, my assistant looked at it, and really, undercutting the market and trying to figure out, okay, what would it take to actually get these properties to move and account for all this adverse selection? It was probably closer to 5 to 6K per acre on that. So like, a huge difference, over 2x difference, that we're just being more conservative on. And, obviously we feel very strongly and have the experience backing our assessments from that perspective, because, minor subdivide, like, they are tough again, and especially you got to be working with the macro. Like, if you're going to be doing it in these states that are already feeling the pressure from too much inventory, especially from a residential side, and land that is oriented towards infill, and trying to get some builders to act on it, or people like buy for vacation homes or summer homes or whatever, or winter homes, I guess, it being in the South or the West. You're going to have to take into account that just reduced demand in general, plus like a lot of underlying weakness within the economy. That also has to be addressed. So definitely can still find solid deals out there. It's just got to be smart about how to assess these things. So we're trying to educate as many people as possible. Again, I could probably repeat this message on my podcast almost every single day, and it might improve the industry's ability to solve this by 1%. I would still call that a victory here. I'd rather keep a diversity of topics, but because so many people try to focus on these deals, and we try to do more of them too. They're exciting. There's a lot of potential in them if you do them right, but you gotta be conservative and careful with your assessments, because if you blow up a minor subdivide, like that can just kill your business one fatal swoop, especially in this market. So just be careful out there. With that in mind, seriousland.capital for any of your funding needs, Land Daily Diligence Facebook group, zero cost review of your land deals, and landpricer.ai, most reliable land pricing tool on the market. Looking forward to talking to you next time. Take care. Bye.